Let's break down the first monetary policy announcement by the RBI Governor Shaktikanta Das for the fiscal year 25. Now, the central piece of news is that the repo rate, which is the rate at which the RBI lends money to commercial banks, stays unchanged at 6.5%. Now, this decision didn't surprise many and marks the 7th time in a row that the interest rates have been kept unchanged. So why did the RBI maintain the repo rate at 6.5%? And are you wondering if a rate cut might be coming up next? Let's discuss. Now, inflation has been a significant issue for economies worldwide, including India. And when prices rise too high too fast, it hurts everyone's buying power. Now, to manage inflation, central banks like the RBI can adjust interest rates. Now, raising interest rates is a classic move to cool down inflation by making borrowing more expensive, which in turn slows down spending. Now, following this playbook, the RBI previously ramped up the repo rate by a total of 250 basis points through 6 consecutive hikes. Now, this was done to tackle the inflation that was troubling the economy, and these efforts seems to have paid off as headline inflation, which gives us the total inflation picture, dropped from 5.7% to a more comfortable 5.1% in the early months of this year. Now, even more encouraging is the decline in core inflation, which excludes volatile food and energy prices, which is staying under the 4% mark for 3 months straight. However, it's not all smooth sailing. India still faces risk from unpredictable food prices, and the recent uptick in crude oil prices adds another layer of uncertainty. Now, looking forward, the RBI has shared an optimistic outlook, pegging the inflation forecast at 4.5% for the fiscal year 25, assuming we get a normal monsoon. Now, this is a step down from the 5.4% target of the previous fiscal year, edging closer to the RBI's ideal inflation target of 4%. And for fiscal year 25, RBI also expects a GDP growth rate of 7%. Now, the financial markets generally respond positively to a rate cut because it reduces the cost of borrowing, stimulating investment and spending. However, considering the existing threats to inflation, the markets widely expected that the RBI would keep interest rates steady. Now, with the repo rate holding steady, we are likely to see interest rates on loans and deposits stay the same for the time being. This is particularly relevant for loans and other financial products with interest rates pegged to the RBI as the repo rate. Having said that, this is me, Melisana, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.